BP reports third quarter earnings on Tuesday at 7 a.m. UK time. That's the 1st of November. Analysts are looking for a big drop from last year's third quarter underlying profit of $1.8 billion, down to a figure closer to around $780 million, as the slump in oil prices works its way through the system. That works out at 22 cents a share on revenues of $54.4 billion. Let's take a look now in some more detail as to how to trade the stock. Josh Mahony joins us with the chart. What you got?
Yeah, so essentially I just wanted to take a real long-term picture and then just work our way in to see exactly where we stand at the moment, and that means starting on the monthly chart. And we can see with the monthly chart that essentially we have managed to break back above this crucial 487 mark. Now essentially the turn of the year, we can see we were in the doldrums, and since then we've seen two very strong legs higher with that consolidation in the middle. The question mark is, now that we've regained that 487, are we now going to pull back for another consolidation, or are we going to push higher and then crucially get back towards that 526 mark? Now on the weekly time frame, we can see that essentially whilst we did sustain price action above this 487 mark, we are now back below that mark. So that brings us into the potential retracement territory. If you were going to look at the retracement of this most recent move, you'd be looking for potential retracements down to, let's say, 438, that kind of area, to 440, 445s. Now, in terms of shorter term price action, that should give us some sort of idea of whether that's actually happening. And you can see that largely prices near enough rotating around that level. So yes, we are below it at the moment, but recently we've been near enough ranging around about that level. So the breakout really is likely to come with an hourly or 4-hour hourly close below 480 or back up above, let's say, £5. Now, obviously, the earnings report is going to be the thing that's going to spark it on the next move. But once we do get that first move, we're likely to see let's say it comes towards the downside, we're likely to see a continued retracement. That doesn't necessarily mean that this uptrend that we've been seeing throughout the year is negated. What I see it as is potential short opportunities on the short term, but then in terms of a longer term play, good buying opportunities back around your sort of 76.4% retracement or your 61.8 retracement. So looking for opportunities to get long on the short side, or if we see another break higher, then it's just going to be a continuation of the strength we've seen so far in 2016.